Hi, everyone, and welcome to the Secrets from the ERISA Vault podcast. I'm really glad that you're here. My name is Kaitlyn Barciszewski, and I'm one of the attorneys here at Eric Buchanan Associates. If you're listening today, there's a good chance you or someone you care about are dealing with a long-term disability insurance claim. And if that's the case, you've probably already discovered something frustrating, that these disability policies are full of clauses and rules that are not easy to understand. They're full of technical language, fine print, and rules that can seriously affect your benefits. Likely, you don't even have a full copy of your policy, but you've been told about certain terms and requirements that you need to meet. Well, these policies are really important because they govern your claim for benefits and control when and what the insurance company has to pay. But trying to prove your disability without understanding the controlling policy terms is like trying to play a new card or board game without knowing the rules. And if you've ever tried to just learn as you go when playing a game against someone who is well-versed in the rules, then you know that it often doesn't end well for you or for the newbie. So today I want to walk you through the basics. What long-term disability or LTD policies are, what individual disability insurance policies are, and most importantly, the key provisions you need to understand so you don't get caught off guard or taken advantage of by the people who do know the rules. So let's break it down in plain English. First, let's talk about the two main types of disability coverages. Most people have long-term disability or LTD through their job. These are group policies, usually cheaper and easier to get because there's little or no medical screening at the beginning. But there's a trade-off. LTD policies typically pay about 60% of your income and reduce benefits based on other income and include more limitations. On the other hand, individual disability insurance or DI policies are purchased directly from an insurance company. They tend to be more expensive, but they're based on a fixed monthly benefit, not a percentage. And they often offer more flexible and more protected terms. So, for example, some DI policies can cover you in your exact occupation, or even your own specialty for the entire life of the policy, which may be for your entire lifetime, which is a big advantage over most LTD plans. So now that we've distinguished the two main types of disability income policies, let's discuss the most important part of any policy, and that is how the word disability is defined. In LTD policies, the most common setup is defining disability as being unable to perform your own occupation for 24 months. Then, after 24 months, it switches the definition to being unable to perform any occupation, meaning you must show not only that you can't go back into your own job, but that you are unable to perform the duties of any transferable occupation. That switch after 24 months is where a lot of claims run into trouble. DI policies, on the other hand, are often more favorable. Many DI policies keep the own occupation definition for the entire length of the policy, and some even go further, covering your own specialty. So, for example, a surgeon who can no longer operate can keep receiving benefits, even if she can do other non-surgery work. And that's a huge difference. So, some policies, especially LTD policies, may require a certain level of income loss to qualify as disabled, whereas DI policies are often more flexible, especially when it comes to partial disability. So how much do you get paid if you meet these various definitions of disability? So I want to move on to talking about the actual benefit that you'll receive. And with LTD policies, you'll often hear that you can receive 60% of your income, but that number can shrink quickly. You have to look at how income is defined in the policy whether bonuses or overtime are included, and whether there's a monthly cap. So that 60% of your income, you have to look at how that's defined. So whether you can include the bonuses and overtime pay that you received before becoming disabled. And then on top of that, LTD policies almost always offset other income you're eligible for, like Social Security, disability benefits, or workers' compensation. So you can see how your 60% LTD benefit can quickly reduce or even be wiped out when you receive other benefits. DI policies work very differently. Most DI policies pay a set monthly amount listed in the policy. They're also less likely to reduce benefits based on other income benefits you might receive, and may even include additional benefits like a temporary supplement while you're waiting for Social Security to kick in. And many DI policies also include automatic increases over time, so the actual benefit may end up being higher than what's listed on the first page. And so now let's talk about policy limitations. These are majorly important because they can limit how long you get paid, or whether you get paid at all. So LTD policies commonly limit benefits for mental health conditions, self-reported conditions like migraines or others that can't be objectively verified through testing, and sometimes musculoskeletal conditions like back pain. These conditions are often capped at 24 months of benefits. So if you're disabled from one of these types of conditions, it's really important to check the limitations section in your policy to see how long you can actually receive benefits for your specific condition. DI policies are generally more generous here and do not have any condition limitations. But that said, even every DI policy is different, so it's still important to read the details carefully. And then another common limitation in these policies is pre-existing condition clauses. In LTD policy, this is usually standardized and tied to a short look-back period before your coverage starts, usually the 3 months before your coverage starts. And your claim will only be excluded from coverage as pre-existing if you started working for your employer within 1 year of when your disability began. So if that's true for you, then the insurance company will investigate to determine whether you treated for, or maybe even should have treated for, your disabling condition within the 3-month period before your employer provided coverage began. DI policies also include these provisions, but sometimes the wording can be broader or include unique provisions like first manifest clauses. So these clauses can potentially exclude conditions that showed up before the policy began. So they need to be reviewed very carefully to determine if you're eligible for coverage. Next, you may also be wondering how your policy treats partial disability as opposed to total, because not all disabilities are all or nothing. Both LTD and DI policies often include partial disability or residual disability provisions, where you can work but still be disabled and receive benefits if you are earning less than what you were before. Oftentimes, your drop in earnings while working while disabled must be over 20% of what your pre-disability earnings were. And then you only receive a reduced LTD benefit to bring you back to 60% of your pre-disability earnings after factoring in your current work earnings. But remember, as I explained earlier, high-quality DI policies may provide the full defined benefit for someone who is unable to do their own occupation or own specialty, even if they still work full-time in another role. And another important thing to note here is that when you're trying to work while receiving LTD benefits especially, is that your policy may stop paying benefits altogether if you return to working full-time, no matter what your disability earnings are. And the insurance company is more likely to investigate you more intensely if you try to work at all while disabled. So I just want to point out that red flag for you. And lastly, you may be wondering how long your benefits will last under your LTD or DI policy once you are approved. LTD policies typically pay your benefits for 24 months under the own occupation definition of disability, then continue only if you meet the stricter any occupation standard. And they often end around Social Security normal retirement age, which for most people nowadays means 67. Also end if you pass away before age 67, but some LTD policies pay survivors' benefits to your beneficiary for a limited period. So it's also worth reading the when benefits end section of your LTD policy to see if other rules apply. Like, if you reside outside of the country for a certain period, does that mean your benefits end? Sometimes the answer is yes. And DI policies often have more generous duration benefits. Some offer benefits for the full term of the policy under an own occupation definition, which is better. Some include cost of living adjustments over time, and some even offer lifetime benefits if certain conditions are met. So as you can see, these policies are complex, and the differences between LTD and DI policies really matter. Two people with the same medical condition can have completely different outcomes depending on the type of policy they have and the specific language in their policy. That's why it's so important to understand your coverage, pay attention to the details, and get help if something doesn't seem right. If you're dealing with a disability claim and feeling overwhelmed, you're not alone. These policies are complicated, even for professionals. And insurance companies usually don't provide you with easy to understand explanations or guidance. And sometimes it's even really hard to even just get a copy of your full policy. So if you have questions about your claim or you're not sure what your policy really says, feel free to reach out. I'm always happy to review policies and see if I can help. So thank you so much for listening, and please join us next time for more secrets from the ERISA Vault.